Ooh.
Hi
Oh my
everyone,
good.
Carol Van Landingham with eXp Realty. Today I am interviewing one of my partners. I'm probably not going to pronounce your name totally correct. Yet, how do you say your name?
Yesenia.
Yesenia.
Like
That's a beautiful
that's
name.
like saying yes to the singer Enya. Yes,
Oh,
Enya.
okay, I like that. Okay, Yesenia Salomon, and she actually has stepped out on her own in the last few months and started her own insurance agency. She's been in the industry for years, but she's actually gone out on her own. And so I have her here today and just wanted to chat with her a little bit as we're moving into summer and things are starting to pick up in the real estate market. I wanted to chat with her about homeowners insurance. Homeowners insurance is a big thing, especially here in Colorado, Boulder County, because we've had several huge fires and hailstorms and different things. So I just wanted to introduce you and just let you kind of talk about homeowners insurance, what buyers need to look for, what sellers need to be aware of, and we'll just have a conversation about that. So
That's
welcome.
awesome. Well, thank you. Thank you. Thank you for having me. That's
Yes,
awesome.
of
I like
course. Of course. So what is something that you think as a buyer, and especially like a first-time home buyer, that they need to be aware of as they're going into purchasing their first home as far as homeowners insurance?
All right. So as a first-time buyer, you kind of get bombarded with all this stuff that you need from your lender, from your real estate agent, all this stuff. And then they're like, okay, who do you want to use for your homeowner's insurance? And you're like, well, what do you mean? When I was a first-time home buyer, I remember I was just like, tell me what to do and I'll just follow the steps.
Right.
And it's still the same because we don't buy a home all the time. It's a transaction. And even if we do it 10 years later, it's still new to us
Mm-hmm.
as,
Yep.
as home buyers. So for homeowners insurance, when they tell you go get a quote from 3 different companies, it's so difficult to not just go to price because we don't
Mm,
understand it. We just know it's going to cover my house and here's how much it cost me. I want the one that's going to cost me the least amount, right?
right.
But when you do that, you don't realize that what your policy has until your home burns down. And so when your home burns down and you're looking at your policy and you're like, you're going to reconstruct my house, right? And you're like, wow, you paid for us to just give you a certain amount of coverage. We're not going to reconstruct your house. And so if you don't pay attention to your homeowner's policy saying it has replacement value versus
Mm,
actual cash value, that's where you end up holding the bag, having to pay more out of pocket. And that's why there's some instances where people cannot rebuild their home because they don't have enough money to rebuild their home. And so for her first time home buyers, I'm like, what do you really want your insurance to do for you? We can nickel and dime it if you want to cover a little water damage here, a little that. But if you want it to be replaced when it completely burns down, then this is the policy we need to look at, kind of thing. So just looking at that coverage that's going to replace your home
yep.
and then deductibles. And what a deductible is, it's what you're responsible for before the insurance company helps you pay to rebuild your home or reconstruct your home. So in the past, it was what they called a fixed deductible, $1,000. You would just pay $1,000 and the insurance company would pay the rest to fix your house. Well, in Colorado, we've had so many hailstorms. There's a lot of insurance companies that are feeling it in the pocketbook as far as how much of a catastrophe a hailstorm can cause. And then we got our wildfires. So you're getting all this claims money going out, and it's getting to a point where you're not getting enough money coming in. So they're like, well, what can we do to put a little more responsibility on our homeowners?
Mm-hmm.
And they've increased deductibles. So now your deductible is a percentage. And
Oh,
so a
wow.
percentage, yeah. So what that means is if your home is covered, let's say for, I'm gonna make easy numbers because it just makes it easier,
Yeah.
$100,000, which I don't think any home should be covered for hundred
Yeah.
thousand.
Not in this area.
But let's just say it's covered for $100,000. Um, when you have $1,000 deductible, it's $1,000 deductible. But when you have a percentage deductible, now it's a percentage of that 100,000. So it's still $1,000, which most people are like, oh, it's not that bad. But then if your coverage goes up to 200,000, now your deductible is 2,000. If it goes up to 300,000, your deductible is 3,000. And
Mm,
again, this is what you're responsible for to pay before your insurance company will help pay something that's covered under your claim.
right. Wow. Great insight. So I hadn't even thought about that as far as like first time homeowner, because as the real estate agent, I give them, a few people that they can call and look at that. So it's important that they know that they need to sit down with that person and say, this is kind of what I know, what I need to know. You tell me what I don't know and what I should be looking for. So that's really good. So let's talk a little bit about just the increases in the area. I've talked to several people over the last month, and a lot of these people, actually, I was just at my brother-in-law's yesterday for my sister's birthday, and he was telling me that they live down in Monument, and he was telling me that their insurance has increased since they've been in their house 5 years now, and it's increased 250% since they've been in their house. There's another person that I have that's down in Castle Pines that's a lender with my company, and he had said that his actually doubled over just from last year to this year. So talk to me about what's going on just kind of in the industry and what we really need to be looking at, like as far as like if you're looking in a flood zone or if you're looking in like a fire zone that's already had fires previously, what things do we need to look for as far as that goes?
Okay, so when you're buying a home, buy the home you're gonna love to live in. But also take into consideration if it's in a wild, they call it a wildfire score. So if it's in an area that's prone to wildfires, you're gonna have a hard time finding an insurance company just to cover it. Even if it's a
Mm,
multi-million dollar house, you have great credit, it's your first time buying a house, you haven't had any prior incidents or claims on
right,
your insurance. There are very few companies now that are insuring in a wildfire zone, which is basically like your mountain areas that are kind of isolated. Because even the little towns, you may be fine in some of the little mountainous towns, but as you get closer to the foothills and there's wildfire prone areas. So when you're looking for a company or for a house, just know that sometimes you're not going to find a company that's going to insure you. It's going to be very difficult, and those rates are going to be very high because there's not a lot of companies that will do it. And the ones that'll do it know that, hey, this is a high risk. And
right.
I mean, we had one client that his quote was like $18,000 for his homeowner's insurance for a
Wow.
2.3 million home. Yeah.
Still, wow,
In
that's
the
insane.
areas, yeah, in the upper areas of Boulder.
Yeah,
So yeah. So it's
yeah,
just something to take into consideration how difficult it is when you're starting to get more into a wildfire area. And then as far as hail prone areas, down the Front Range, you get more hail than you do in the mountains. So
mhm,
sometimes you'll find that your homeowner's insurance is more here in Boulder County. Maybe not as much in the Weld County. The Boulder County seems to get a lot of hail. I
yeah,
don't know, like it's just and
yeah,
Frederick Firestone area. And those rates may be a lot higher than a home in the mountains. If you're comparing apples to apples kind of thing, just because you're more prone to have a hailstorm than the
right.
wildfire.
Okay.
Um, but that's what to be looking for is how prone is your area for a hailstorm? You're going to get
Okay.
higher.
And I know just as the real estate expert for my clients too, I can kind of find out that information as far as like, is it in a flood zone and different things like that. So one of the things I also just wanted to bring up is as a seller, because I've had several sellers put their home on the market, and then that's a huge thing is that their homeowner's insurance has gone up like, 100% or whatever in a year. So one of the things as a seller, as you're looking to put your house on the market, if you know that your homeowner's insurance has gone up and you're wanting buyers to purchase your house, I think it's really important. We have the dates and deadlines and all the contractual items in the contract when you go under contract with the buyer. But as a seller, I think it's important that you are listening to your real estate expert because one of those contractual dates is home insurance deadline. And so a lot of people put that close to like if you're going to be under contract for 30 days before you close, they'll put that towards the end of the agreement. I think if you're in that situation where you know that your homeowner's insurance has increased, you need to put that closer to the front of the agreement so that whoever's buying your house can actually seek out insurance. And that's not going to be something that's going to fall out 30 days down the line. You need to probably do that within the first week or so. So
I
yeah.
I I think I agree with that because um even as the lender side of things, if
Mhm.
you know how they do that faithful lending where they're like, I don't know what the
The good
contract is
faith
called.
estimate.
Yeah,
Yeah,
and they input in there, we think your homeowner's insurance is gonna be like
right,
$3,000 a year. Well, what if it came back at 18,000?
right.
Like, what
Yeah,
does that do to your loan? And
right.
you're at the end of your term versus let's tackle this in the first week or two.
Right, right.
Um, yeah, that's a huge difference on your loan itself.
Yeah,
Like,
no
yeah.
doubt.
Mhm.
So anything else that you would add just to our pool of buyers and sellers, and anything else that they need to be familiar with or look at when it comes to homeowners insurance?
Well, the thing is, like, let's say you are the seller and they come in and they're like, you know what, your roof has hail damage, file a claim.
Mhm.
You're the seller and you're buying another house. You know you're going to sell your house and you're going to buy another house.
Right.
If you have not gotten your insurance quote for your new house and you filed a claim to fix
Mhm.
the roof on the house you're selling, now you have a claim showing up on your insurance history and you're going to have a hard time finding an
Coverage.
insurance company. Yeah, especially if you've had 2 claims or more in the last 5 years. So
Really? Okay.
yeah, that's one thing to keep in mind when selling your house. When buying a house, sometimes the buyers don't realize that in their loan, the insurance is already calculated in there. And so when I've done quotes, they're like, oh my gosh, so I have to pay $200 a month for my auto and 180 for my house. So I'm looking at 380 for insurance. And I'm like, well, technically, yes, but that 180 is in your mortgage payment. So you
Yeah.
don't, if it's escrowed, like you don't have to worry about that extra 180 apart from your monthly payment. And they're
Right.
like, oh, okay, I get it. I get it. And then I go to explain that when your homeowner's insurance renews, your homeowner's policy covers to rebuild your house. Inflation
Hmm.
happens in Colorado. So the coverage for your house has to go up. There's no way that we're going to give you a coverage for $250,000 this year, and 10 years down the road, you still have 250,000. Is
Right.
that going to rebuild your house 10 years down the road?
Yes.
No, so your coverage increases, your homeowner's insurance increases because your
Okay.
coverage is going up. And then you had a rate change in the state, so you have another increase on top of that. So think of insurance as it's an inflation increase and a coverage increase. Like it's
That's
just,
good. Yeah.
yeah, rate and coverage. That's what's increasing your insurance. And we live in a great state. Colorado has great inflation.
Yeah. Yesenia, you have done such a great job just in providing information. I'm going to leave your contact information in the notes. I'll put this on my YouTube channel. And so I want people to be able to contact you if they're looking for a good person to use as for their homeowner's insurance, or you do a lot of other insurance as well, but you're a great resource. So I really
I think.
appreciate you taking the time today to chat with me a little bit more about this. And yeah,
Yeah, thank you. Thank you. And one last thing I just want to say is I do invite people to send me the quotes they're getting, and I will review them and compare
okay,
with it through an insurance profession's point of view and tell them, hey, go with that other company or this one's better. Like I'll help
right.
them review the coverage for them.
That's awesome. Okay. Thank you so much. We appreciate you.
Thanks.
All right.